Hey everyone! If you've ever pondered on how to initiate your venture into the stock market and are eager to unravel the secrets of one of the most successful investors, you're at the right destination. In today's video, we'll delve into the remarkable investment philosophy of Peter Lynch, the finance wizard. He transformed millions into billions, and here's the kicker: he's keen on sharing the strategies that propelled him to the summit. We'll explore how to select the finest companies, steer clear of common pitfalls, and construct a winning long-term portfolio in the dynamic world of the stock market. Subscribe to the channel, hit play, and let's embark on this journey towards financial success in the stock market. 5. Introduction to Stock Investing for Beginners. Hey everyone! I'm super excited to share an amazing video on diving into the world of stock investments, especially for those starting this journey. Welcome to this conversation full of insights on taking the first steps in the exciting stock market. Get ready to absorb some valuable tips. Let's get straight to the point. Today, we'll explore the universe of stock investment from the perspective of one of the masters in this game, Peter Lynch. You know, the guy who turned the Fidelity Mellon Fund from a small amount of $20 million to an incredible $4 billion? Yeah, he's a legend, and we're going to unravel some of his strategies to help you make smarter investment decisions. Lynch's philosophy is fantastic. He believes the key is to buy large companies at reasonable prices and hold on to them for the long term. But here's the catch. He also emphasizes the importance of having a personal connection with the companies you invest in. This not only builds confidence but also helps withstand market storms, resisting the temptation to sell during the most turbulent times. Sounds amazing, right? Now let's talk about something crucial: research. Lynch is firm in saying that relying solely on your experiences isn't enough. He reminds us of the importance of digging deep into financial statements, understanding the company's business models, evaluating their competitive positions, and keeping an eye on industry trends. And of course, no trying to time the market, okay? The idea is to focus on companies with sustainable growth potential and forget the stress of predicting market highs and lows. Are you ready for this dive into the world of investments? Let's go! 4. Peter Lynch, a successful investor. Let's talk about a true investment master, the incredible Peter Lynch. Just imagine this guy led the Fidelity Mellon Fund for 13 years, from 1977 to 1990, and guess what happened? The fund's assets skyrocketed from modest $20 million to the incredible mark of $4 billion. Isn't that amazing? We're talking about a finance wizard here. The most impressive feat: Lynch achieved an average annual return of 29.2% during that period. Seriously, you have no idea how spectacular that is in the investment world. It's almost like he had a magic wand to turn dollars into more dollars. And what's even more fascinating is that he did it in an accessible way, with an approach that even beginners can understand. I bet you're wondering how Lynch pulled off this feat, right? Well, he had a simple, straightforward investment philosophy, and coolest of all, it was based on common sense. He believed in the idea of buying large companies at fair prices and holding on to them for the long term. It sounds easy, but it's a powerful strategy that made him a legend in the world of investments. So if you want to discover the secrets of this financial wizard, stay tuned because we're about to delve into the fascinating details of Peter Lynch's world. 3. Peter Lynch's investment philosophy. Now let's delve into the details of Peter Lynch's incredibly simple yet effective investment philosophy. Just imagine, he firmly believed in the idea of buying shares of large companies at reasonable prices and holding on to them for a good while. It sounds easy, right? But it's precisely in this simplicity that Lynch's genius lies. The big deal here is the personal connection he emphasized. Lynch wasn't just about numbers and charts. He sought to invest in companies he could trust. He said that by getting to know and understand the company, you create a kind of personal bond. And guess what? This makes all the difference when the market winds get rough. Having confidence in your choices helps resist the temptation to sell your stocks when the financial roller coaster gets intense. Have you ever thought about how genius it is to invest in something you really know and understand? Lynch claimed that this approach not only keeps you invested in the long term, but also prevents you from succumbing to emotional market pressures. After all, when you have a personal relationship with a company, you're more likely to have confidence in its prospects and resilience during market storms. Lynch's philosophy is like a practical guide for anyone looking to build a solid and reliable portfolio. Fascinating, isn't it? 2. research and informed decision-making. Now, folks, let's explore a super crucial part of the investing game: research and informed decisions. You know, it's not just about taking a shot in the dark and hoping for the best. It's about digging deep before taking any steps. Peter Lynch, the master, always emphasized the importance of thoroughly knowing companies before investing in them. So what does he suggest? Well, he reminds us of the need to analyze financial statements. It's not just for number nerds. It's for all of us who want to make smart decisions. Also, understanding the company's business model is like having a map before a big journey. And there's more, folks. Lynch highlights the importance of evaluating the company's competitive position. It's like knowing if your team is ready to face the competition in the financial field. Oh, and we can't forget about industry trends. Lynch was always in the know. He said that keeping an eye on trends is like having a superpower. By doing so, we can find out if a company is undervalued or overvalued. And folks, who doesn't want to make informed choices when it comes to our hard-earned money, right? We're about to enter the fascinating universe of financial research. Get ready for a knowledge roller coaster. 1. Avoiding market timing and Peter Lynch's conclusion. Now, folks, let's dive deep into Peter Lynch's wisdom when it comes to avoiding the trap of market timing. He was kind of a guru in this. Lynch recommended focusing on companies that have a lasting competitive advantage. You know, no trying to guess the perfect time to buy or sell because, according to him, that's like trying to predict the weather. Almost impossible. And the conclusion of this master is a true treasure for beginners. He highlights strategies that are like a practical guide for those starting in this exciting world. Lynch said to invest in what you know, do your homework, look for growth opportunities, and resist the temptation to try to time the market exactly. All of this is part of a long-term approach, a broad view, and financial common sense. Think of it as a journey, folks. Lynch reminds us that when investing, it's not just about winning a battle, but about winning the financial war over time. He invites us to build our financial castles with patience, strategy, and, of course, with knowledge of opportunities we truly understand. These are the keys to long-term success in the world of investments. Ready to follow these lessons and achieve our financial goals? I'm sure you are. Hey, folks! We've reached the end of this amazing dive into the world of investments with Peter Lynch. If these strategies have got you as excited as I am, don't forget to leave that like to strengthen our channel and share it with everyone. I want to hear in the comments, which of Lynch's strategies surprised you the most? And don't forget the best part. If you're not already subscribed, let's subscribe to the channel so you don't miss any videos full of financial tips. Together we'll build a solid path toward our financial goals. Until next time, investors!